This stock was once trading above $70. Today it's fighting to hold above $1.80. And what's even more interesting, both the 50-day and the 200-day moving averages are sitting right above price, almost like a ceiling pressing down on it. Plug Power, ticker symbol PLUG, just closed around $1.81 on the daily chart, up a little over 1% on the session. Intraday, it pushed as high as $1.85. Volume came in around 113 million shares, which is solid participation for a stock at this level. But this chart is not about today's 1% move, it's about compression and a decision that's coming soon. Let's zoom out and walk through the structure. Back in early October, Plug Power had a violent spike. The stock exploded from roughly $1.50 to over $4 in a matter of days. At its peak during that move, it wicked into the $4.08 area. That was a massive short squeeze type of candle, huge range, huge volume, emotional buying. But what happened next is the real story. It failed to hold those highs. After tagging above $4, the stock rolled over aggressively. Lower highs formed almost immediately. The rally faded. By November, price had already broken back below $2.66, which had been a key support during the run up. Since then, the chart has been carving out a steady downtrend. You can see the pattern clearly on the daily time frame. Lower highs around $3.57, then around $2.66, then around $2.23, each bounce weaker than the last. Now here's where it gets technical. The 50-day exponential moving average is currently sitting around $2.09. The 200-day EMA is right there as well, around $2.11. When those two moving averages cluster together above price like that, they often act as heavy resistance. Right now, Plug Power is trading below both. That tells you the short term and long term trend are aligned to the downside. Support wise, we've got a clear level around $1.79 to $1.80. Price has been hovering right on top of that zone. Just beneath that, there's minor support around $1.56, and below that, a bigger psychological level around $1.23. If $1.79 fails decisively, there isn't a lot of strong structure until lower levels. But here's what makes this interesting: volatility has been shrinking. Look at the daily candles over the past few weeks. Smaller bodies, tighter ranges, volume gradually declining compared to the October spike. That's compression, and compression often leads to expansion. The question is direction. Bullish case first: if buyers can defend the $1.79 area and start pushing price back above $2, the first major test is that confluence zone around $2.09 to $2.11. The 50-day and 200-day EMAs, a strong reclaim and close above that cluster would be meaningful. That would break the immediate pattern of lower highs and potentially open the door back toward $2.23 and possibly $2.66 if momentum builds. Short squeezes in names like Plug Power can be fast and violent, especially when price is beaten down and sentiment is negative. We've seen it before. That October spike is proof. Now the bearish case: if price loses $1.79 with volume expansion, that likely confirms continuation of the downtrend. In that scenario, $1.56 becomes the next target, and if that breaks, you're looking at $1.23, which would put the stock back near some of its lowest zones on this chart. And remember, this stock has already shown it can collapse quickly after failed rallies. The bigger lesson here is about failed breakouts. That October move above $4 looked explosive, but there was no structure built underneath it. It was emotional buying, not sustained accumulation. When a stock makes a vertical move without building higher lows first, those moves often retrace deeply. Now, months later, we're left with a stock under $2 below both major moving averages, compressing near support. From a trading perspective, this is not the time to be emotional. It's the time to be level focused. Above $2.11, the chart changes character. Below $1.79, it likely accelerates lower. Personally, I'm watching for one of two things: either a strong reclaim of that EMA cluster with expanding volume, which could signal a trend shift, or a clean breakdown through support with conviction. What I'm not interested in is chop inside this tight range. Low priced stocks like this can be tempting because the percentage swings look big, but risk management matters more here than almost anywhere else. A move from $1.80 to $1.56 is only 24 cents, but that's over 13%. That cuts both ways. Zooming out even further, This is a former high flyer in the clean energy and hydrogen space. The long term chart tells a cautionary tale about hype cycles, massive run ups, massive drawdowns, retail enthusiasm, then a long grinding downtrends. So the real question is this base building or just another pause before lower lows? The daily chart is setting up for a decision soon. Compression under major moving averages rarely lasts forever. If you're watching Plug Power, keep your eyes on $2.11 above and $1.79 below. Break one of those with volume and you likely get expansion. If this breakdown helped you see the structure more clearly, hit the like button, subscribe for more daily chart analysis, and drop a comment below. Do you think Plug Power can reclaim $2 or is another leg down coming? Let's see which level breaks first.